So this is what I want to start from the beginning. Let's assume I don't know whether I'm in a buyer's territory or seller's territory. Let's do this together. This was where we were holding buys. This was the last buyer, or where buy was in the market. Okay. Then what happened? What happened? Price took out this guy. Price took out this guy, meaning that this became our seller, the guy that started the sell, taking out this last buy. Okay, it went up, retraced, dropped again. So this is the current governor or government in power. Okay, not this guy again. If this guy gets taken out, I'll be looking for buy, not this guy. So this is the main guy now. Price went up, came down. Ignore this bottom wick. This is not strong. Went up again, came down, and started doing what? Oh, did like this, came down, and started moving sideways like this. Now I have taught you something like this before when I said once price starts moving sideways like this, if you're in any buy or sell, be very careful because that is price telling you that it wants to, it's getting weak. The cells are getting weak. Now, if you remember what I told you, this first rollover is by the institution, big boys. Most times you can't see this because it's influenced by some fundamental issues, maybe geopolitical issues, FOMC, whatever. This is the one that most traders will catch. This is from here to here is smart money. Now, this is the one that dumb money catches, and it is around this zone that smart money people have started closing their long position, their short position, like covering their shorts. Let's say I entered sell around here with my stop loss here. By this point, I've already gotten more than 100, as in 1:1. I've already made 100% of my investment. As it keeps going down, I'll be doing what? Reducing my exposure, which you see all these weeks. These weeks are price tries going down, the returns. All these weeks are people are telling you that they wish to stay in the market, but they are not comfortable with exposing themselves too long in the market. Understand? No matter how good you are, staying too long on the field exposes you, your chances of dying increases with your duration on the field. The same thing applies to trading. The longer you are in the market, the chances are that you could be taken out. Now, this applies if you're trading, let's say, maybe a swing trade, or you're scalping, and you want to move from scalp to a longer position like swing, you need to be careful because then your stop loss has to reflect the direction and the duration. What I mean is, if I entered here, like I said, with my stop loss here, and price starts going down like this, I'm going to move my stop loss to this point because now this is the new high. If price makes another low, I'll move my stop loss to this point. Now, for you to see clearly what I mean, let me erase all of this. Excuse me. Let me erase all of this so that you see clearly what I'm talking about. So this is where I'm in now. If I entered sell here with my stop loss here, and price makes this confident low like this, I'll move my stop loss to this point. If price makes another low, I'll move my stop loss to this point. As price keeps making new low, I'll move my stop loss to this point. This is where my original stop loss was. Now this is where my stop loss is holding, above here. Anywhere even to this point here. So I've made more than 2 arrows on this trade. But once price did like this, I'm already taken out. Now I'm out of the trade. In fact, my stop loss would have been triggered around here, not even higher, around here, reflecting where I put it here. Now, this is an indication, but if I were to say I'm holding for a long trade, I would have still been holding my stop loss maybe here, and I would have been taken out. If I said, okay, let me hold it more, I would have remained here, and all the profits I made to this point would have been wiped out once price came to this high. Not that I'll be taken out, I'll still be in the market, but all my profits now have been given back in the into the market, which is not very good. That is by the way. Now, to continue the analysis we are doing, let's get back to where we were. Pay attention, guys. Just pay attention. This is the last buyer. It's last now because looking at it in hindsight, it was taken out by this seller. Now, price made a new low, meaning that this is now the current guy holding the market. Price did like this and started going sideways until it dropped. Now, until price comes above even this guy, I don't want to hold, I don't want to be in any buys. I want to be looking for sales. Okay, until price comes above this guy. If not, this is the guy I should be looking at. This guy here. Why? Because this is the last resistance before price dropped. So if this is the last resistance, that means that once price came up, definitely you wait for retracement. Or what I always teach you, always wait for retracement. If price is changing direction, wait for retracement. It must give you that retracement, whether it's deep or shallow, before going up. Now, this is the retracement. This is our resistance. What would I do? I'll wait for price to break above this guy to take a buy. But if price makes a new low, I'll wait for price to break the high of that new low before taking a buy. Pay attention. I am not rushing. Now, based on what I've explained here, let me put it in drawing. What I mean in drawing, let me put it this way. I've already explained everything. Pay attention. What I'm going to do now is not rocket science. This was, I have to do this and this. This from here to here. Okay. This was the last buyer. Let me change this to 1 hour so that it will be clearer. Just pay attention. This is 1 hour time frame. Okay. This is the last buyer, and it was taken out by this guy here. Pay attention. So I'm going to move my box to this point, and this low still remains valid. This low still remains valid because was the last support that was taken out. The last support. This high was valid because this was the resistance, this was the support. Now, as price made a new low, I'm going to move my distance to this point now. So it's going to be between here and here. This is now my new sellers. Price made a new low. I'm going to move it. In fact, let me use this same one so that it's not confusing. I'm going to move it, okay, down here because price has made a new low. Just follow what I'm doing. Oh, follow. Let me delete this one. Let me delete this one. So this is where we are now in the market. This is where we are. Now, if in case you're following support and resistance, as price made a new low, this is where I'll be in the market, where this is my support, this is my resistance. Price made a new low, this is my support, this is my support, this is my resistance. So this is where we are now. Okay, price made a new low, but this is our last resistance. This is our most recent resistance. Until that guy is taken out, I'm not looking out for any buy or sell. Okay, I'm not looking for any buy, only sells until this guy is taken out. And as you can see, price came up and dropped down to the T like this. If I put my horizontal line here, let me draw a horizontal line, which is this place. You see that to the T here, price came and tapped our support. Look at it. This is not rocket science. So if I had dropped down to the 30 minutes to look for sales, I would have hit my TP, which is the exact support here. Okay. Now, let's say that this is where we are in the market. This is where we are right now in the market on the 1 hour time frame. What am I going to do? I'm just using 1 hour and 30 minutes now. This is my resistance. I'm going to drop down to the 30 minutes time frame to look for sales. Remember what I taught you? If you're looking for sales, that means you have to be tracing the support. You have to be tracing the support, following support. Now, if I'm to follow support, this here is support, meaning that I'll be looking for sales below this guy. But instead of price to come below it, it held here. This became our new support. So what I'm going to do so that it's not confusing, I'm going to use this line. This is our first support. And I'm going to change this line to TP. Yes, gold. Let it look like this so that you will know. This is our support. So until we come below this guy, I'm not touching any sales. But instead of coming below, price went higher. How did I know price went higher? Because of this bullish candle. If this bullish candle has not closed, I would have been looking for sell below here. But as this bullish candle closed and it broke this resistance, this now became our support. This now became what? Our support. Remember, this former line I drew here is from the 1 hour. This is our 1 hour support. If you are not sure, let's go to the 1 hour so that you will see it. If you go to the 1 hour, notice that this is the 1 hour support. Don't delete the support on the 1 hour. Leave it there. Like I told you, 1 hour is a very strong time frame. A lot of magic can be gotten on the 1 hour. Now, price came down and went up again, meaning that a new support has been formed. I'll have to take this to this point here. This is where we are now. Until we come below this guy, I'm not taking any sales. But as you can see, instead of price to close bearish below this guy, it came deep, tapped TP, and did what? Turned bullish. And as it crossed this our 1 hour resistance, what do? You go back to the 1 hour time frame. Once you cross that 1 hour resistance, you go back to what? You go back to the 1 hour time frame. Now, I'm going to take this thing to this point. You see how it's changing. I'm going to take it here, meaning that this one is no longer needful. It's no longer needed. This is no longer needed. But for you, leave it on the chart. Leave it so that I will understand. Now, let's continue. This is the current governor now. What I mean is, until this guy is taken out, I'll be looking for what? Buys. Until this guy is taken out, I'll be looking for buys. And remember what I told you. If price takes out our last seller, always wait for what? retracement. Always wait for retracement. Okay, always wait for retracement. So again, I'm going to put a line here. This line is going to be our 1 hour TP or resistance. 1 hour resistance. Okay, meaning I'm only looking for buys once candle breaks above this 1 hour resistance on the 1 hour time frame. Okay, if you want to drop to the 30 minutes time frame, that is your choice, but on the 30 minutes it's going to look too noisy, so you can remain on the 1 hour time frame. In fact, most of your analysis you can be doing it on the 1 hour time frame for now, because I've noticed that jumping from one time frame to another is appearing difficult. So you concentrate on just one time frame for now. Okay, if you had concentrated on the 1 hour time frame, you would have taken a sell below this guy here, because this was support. This candle broke below this support, and our sell would have been taken on the low here. But on the 30 minutes time frame, you will not see this. You would have missed this trade if you were trading, if you were looking at it on the 30 minutes time frame. But on the 1 hour time frame, you would have gotten it. How? What do I mean? That is when we were still in sellers here. I told you, always look for what? Support. This is resistance. This bullish candle confirm that this has now become what? Support. This is what I mean. Price went up, came down, went up again, meaning that a support has been formed here. This bearish candle closing below this support is telling us that, 1 second guys, 1 second. Okay, let's go ahead. Just pay attention. It might look confusing, but watch it a million times so that you get a hang of it. This was our last seller. Okay, if we were on this 1 hour time frame, we would have seen this sell. So what I'm advising you to do right now is just, for now, instead of using multi-time frame, just concentrate on one time frame. And the only time frame I'll ask you to concentrate on right now is the 1 hour time frame. I would have said 30 minutes because 30 minutes means there's possibility that you'll be catching plenty of trades. But then again, there's possibility that you'll be entering plenty of losses. Okay, which means if you're trading on the 1 hour time frame, you would be you only have 24 candles to call it a day. On the 30 minutes time frame, you have 48 candles to call it a day, but that one um, is by the way. Now if you want to combine the 30 minutes and the 1 hour, you can do that because I've already started explaining it. But if you want to concentrate on just the 1 hour, then you are on the right track, which means that this particular setup, you would have identified it. Price came down, went up. This is resistance. I don't know if I can't explain this enough, because you are in advanced session, you should know what resistance is. You should also know that this is support. And this candle breaking and closing below the support means that we now have what? A candle that has breached our support. And if you put your entry here and your stop loss here, you should be able to do what? Get 1:1 before it reaches your 1 hour support. That is for how this one looks. To use this particular thing, this is how I'll do it. I'll put my entry here, put my stop loss here, and my TP is going to be, my final TP is going to be here. My final TP is here, which makes it 1.7 R. Okay, that means before I reach this my final TP, I would have taken something out. I told you I always take something out on 1:1. and I don't enter exactly. I used to leave like 2 pips before I enter, 2 pips under the last candle I'm targeting. Like in this case, it's going to be 2 pips. Watch you. I'm zooming so that you would see it clearly. It's going to be 2 pips below this my entry, 2 pips below this bearish candle, and my stop loss is going to be 2 pips above the structural high, which is this. Now what I mean by structural high for simplicity is this. This is structural high. Price did like this, went up, came down. So all of this makes up the high, all of this makes up the low. So my stop entry is going to be below the current breakout candle, and my stop loss is going to be above it, something of this nature. Okay, with that being said, let's continue on the story we are building. Just pay attention. Continuing on the story right now. Now we're in buyer's territory because how are we in buyer's territory? We took out this seller, so we're in buyer's territory. And again, for me to take a buy, I need to get a break above this resistance for me to take a buy. So price has given me a low, come up. This bullish candle closed right on the resistance, so it's a no-no for me. Okay, came down again and started going gradually like this. This candle broke what? Broke this resistance. So what am I going to do? I'm going to enter my buy, place my buy right here, my stop loss, the structural low, again structural low. Which, what do I mean by structural low? Like I told you, I don't rush my explanation, so you can't tell me I was fast, and you can't tell me that you don't understand. All you need to do is watch it over and over. Structural low means from this point, price went up, came down, went up again, came down, and was look at, I'm starting from this point here. I'm starting from this point. Anything I do, watch it this side. Price came down, went up. In fact, let me draw it on it. Price came down, went up, came down again, went up, came down, and started going sideways, came down and broke the high. Now, if I'm to bring this out, if I'm to bring this out, this is how it's going to look like. This is it. This is it. This this is it. So this is where I'm going to enter. You see this low? You see this low here, which follows this low here, but you're going to put it under the candle wick. You won't put it inside of the candle. It must be under the wick. Okay, and as usual, you have to give 2 pips below. Then all you need to do then is to do what? Come here, copy whatever is here and paste it where? Here. Copy whatever is in this stop loss and paste it here. What this does is that it automatically makes this 1. Watch here. Look at here. See what will happen. Have you seen it? It has turned to what? 1. And if you did that, you see that you would have hit your what? TP. You would have hit your what? TP. This is not rocket science. This is how to just get what you want and wash your hand and just stay out of any loss. But if you say you want to hold it, you'd have held it, it came back to your entry, give you another opportunity to close. If you want to be greedy, it will come back again. Okay, now I've explained this. Now, if you look at this, this is no longer the current guy. This is no longer the current governor. The current governor is this guy now. So I'm going to move this my rectangle. I'm going to move it to this point here. This is now the current what? Governor here. But to be on the safe side, To avoid all the noise, you can put it from here to here to avoid the noise. Okay, if not, the actual place is here. Why did I say the actual place? Because this is the last support, this is the last support, and this resistance is the one that was actually taken, but I just kept it here. So this big zone, to be on the safe side, draw this big zone, okay, then draw this small zone. This big zone tells you that you should be looking for only buys. This small zone tells you the exact place where the buy was triggered from. Okay, so we are now looking for only buys. Again, you repeat exactly what you did here. Price has gone up, okay, price has gone up, came back until we get a bullish candle breaking and closing above here. We are not taking any buys. Or if we get the price coming down lower, then this now becomes our new resistance on the minor time frame. What do I mean by new resistance on the minor time frame? What I mean is this. Remember what I taught you before? Place one line here, place another line here. What this means is that what this means is you should from here, from that point to this point, you're in buyer's territory. Okay, you're in buyer's territory. Okay, that's activated. From this point to this point, you're in buyer's territory, so you should be looking for just buys. Okay, now if this candle eventually drops down like this, you're going to move this your stop loss, this your high to this point here. If it drops further like this, let's say it drops, if it drops further like this, you're going to move this your stop loss. This eh, what it means is that until you come above this guy, you will not be looking for buys. Now, what I can see here before it happens is that you see how strong this red candle is. You see how weak these three bullish candles are. There's a high possibility that it wants to drop to make a deeper retracement. But don't take my word for it. You have to wait for price to actually act. Then you take your action. Like if you were waiting for this to drop, you see what happened? Instead of it to drop, it went up. What I mean is, you see these three candles with one strong red candle, you would have said, okay, price wanted to drop. But instead of dropping, it hit even higher. The same situation applies here. Don't just say, oh, okay, I've seen three green candles, means that it is weak compared to this red candle. Let me start anticipating it to drop. Yes, anticipate, but don't act on it. Just wait for it to play out first, then you take your action. I'm going to stop here for now and then find a way to upload this so that you can watch it. And all I want you to do for me is draw all these things I'm drawing. Brush, use this brush, okay, draw them, and or use this call out to label so that I understand. And as you're labeling, um, label it using numbers 1, 2, 3, 4, 5, 6 like that for easy understanding. While I'm not using the labeling method because I'm recording it and I'm saying you're hearing me. But since I can't hear you, you have to use the label, which is this call out. Okay, this call out. Place it wherever you want to place it and write whatever text you want to write. It's as simple as ABC. Okay, with that being said, I'm going to stop this recording now so that I can entertain your questions. Okay.